after a short downtrend, the S&P 500 has rebounded and rebounded hard. Riz and I are going to talk about what to expect this week. Good evening, my fellow Riz Elite members and all of our subscribers here on YouTube. Welcome to our Elite webinar. Now, if you are watching this on YouTube and you haven't done so, you got to make sure you get down there and you hit that like and subscribe button for me. Hit the little bell icon next to it to get notified every time we upload a new webinar here on the channel, because you're not going to want to miss what's coming up next, because man, we have just been going absolutely nuts in the market these last couple weeks. And thankfully, I have the man with the plan here. Riz, how you doing tonight?
Good. Yourself?
I am doing great. Thank you so much for being part of this webinar, because, man, we have just done nothing but go up since we hit this dip here on, looks like the 2nd of May. And we have just been going, straight up. We blew through the previous all-time high in a very bullish manner. We kind of came up here. Looks like we made a new all-time high on Thursday, with a new high for the S&P 500 at 5,325.49. But definitely a bit of a pullback after that, and a lot of indecision on Friday. I'm just going to zoom in here a little bit so you can see this better. An absolutely classic pin bar or doji candle here on Friday, showing a lot of indecision in the market, whether, there was just a big battle for the most part between, the buyers and sellers, and we really didn't go anywhere. So, Riz, what has been fueling this rally? Is it just earnings, or is it more to it than that?
Yeah, no, it's earnings. It's a continuation. The market, as we know, remains bullish, right? It's essentially factoring in soft landing slash no recession. It's factoring in some rate cuts still in the second half of the year, which I'm sure we will get maybe one or two, I think, right? As the
Yeah.
time goes on, as inflation remains above around 3%, the chances of more cuts, I would say, dwindles, right? Like we're past the middle of May. Pretty soon before we know it, we're going to be in June, and then, Q2 is going to be over. And then it's going to be, once again, this whole narrative of when do the rate cuts come? What is Fed saying? Powell, for example, really, that's the whole thing that the market's bent on. Yes, earnings have been good so far. Uh, I think a lot of companies in the last few quarters sandbagged their kind of guidance. Essentially, for those that don't know, the word sandbagging, essentially you're like downplaying it. In other words, they're downplaying it, being more conservative. And then once they do that, they might take a little bit of a hit in the stock price at that time, but then they come back and then beat those expectations, beat their own uh, lower range guidance, and then that boosts the stock, right? So people are like, "Oh yeah, but earnings are great." Yeah, earnings are great after they kind of downplayed them. But either way you look at it, not bad at all. We do see kind of the consumer still relatively strong. Retail sales or retail spending is down a little bit. We do see more um, debt. The debt load on individuals is higher, right? Again, we're talking US specifically. We know that the consumer, even then, even after more debt, even after higher servicing costs, meaning to service the debt, whether it's mortgage, whether it's car loans, car payments, whether it's credit card payments, interest, it costs more to service that same debt than, let's say, back in 2020 when rates were lower. So even after that, the consumer's still pretty resilient, right? And we've seen that with earnings. They're still buying, companies are still, spending not as much as they were back when rates were lower, but still. So all these things has fueled consistent and persistent gains in the market, as you can see back from the end of October. It's even with this kind of lower, uh, you know, a little bit of a drop back in April. It was obviously in hindsight just a dip to be bought, and we're back above 3,000, 300. I said back, maybe was it the last week or the week before? I said if we see that break above 5250 high, all time highs, then it's going to be strong run up to 5,300, and that's exactly what we've done. You can see as Chris has kind of made that little bit of arrow there. We broke 5,300 very strongly, and we're now, or sorry, 52.50 very strongly, and now at 53.03, all-time highs. Um, very, very bullish. But remember, we don't want to rest on our laurels. We don't want to think that this means, okay, we're going to the moon. So I always tell people to be a little bit cautious. Personally, I am not very enthusiastic about buying stocks and making investments, generally speaking, when markets are at all-time highs. That's just my viewpoint. That's my strategy. Some will be like, Riz, but this is good. It's bullish in the technical term. It's bullish, from the market sentiment. It's bullish from a momentum standpoint. So why not? Well, that's me. I'm not very much a momentum trader. I like to have a margin of safety baked in. I like to sit and wait until the opportunities come to me, because every time I've noticed that, not every time, but most of the time when we force things, when we chase, when we want to make do, we end up paying the price eventually down the road. So why not wait, right? And for the majority of you that are holding cash, most brokerages now pay interest on cash, right? It's gotten very competitive. So whether you're at IBKR, I know they pay interest on cash. Whether you're at Fidelity, I know they do. So even holding cash, it's not bad. You're generating a little bit of return. It's a risk-free rate of return, right? They're giving you interest. So don't be shy or apprehensive of holding cash if need be. Um, it's not something that you have to constantly just be allocating to new trades all the time.
Yeah, it's a really good point because, cash itself is a position. And I think that's something that a lot of, especially new traders and people who are new to the market don't quite understand. It's just like, oh, I've got this cash sitting in my brokerage account, burning a hole in my profits that haven't come yet. And then they, kind of like you said, invest at the top, and then they have to hold through, maybe some downslide or some downturn, especially if the market goes against them. So, yeah, just being careful and having that cash position. Also wanted to make note here, RSI is really getting up there, approaching that overbought territory on the market. So just kind of keep an eye on that as we move forward in this week. And yeah, really, we kind of came here, tapped that new all-time high, and then came back down, and then a lot of indecision on Friday. So yeah, it's a good advice. Just understand that cash is a position, and there's nothing wrong with being in cash. Like you said, Riz, it does give you a margin of safety. And I know you like referring to it as, keeping your powder dry, ready for that moment when the market does get into more of a favorable position to buy, and then you're ready to go.
Absolutely.
All right, cool. Well, let's go ahead and take a look here at the breakdown for the S&P 500 and kind of see what's going on. And, kind of still somewhat similar from last week. Obviously, we are seeing the run up here in the S&P 500, and pretty much all sectors are benefiting from that. Real estate, especially, making a very nice move here, still below the zero line, but, almost a 6% gain here since the beginning of May. So definitely making a nice push there. The front runners still looking at communications, tech, utilities, and financials, all outperforming the S&P 500 at this time. Energy right there, basically neck and neck with the S&P 500 itself. Consumer staples, healthcare, and consumer discretionary currently underperforming the S&P 500, but still up on the year. I would say that consumer discretionary have really not gained much from this rally, whereas pretty much every other sector is doing very well, with this run up in the market. Riz, what's the deal here with consumer discretionaries? Why is this kind of languishing and consolidating while everybody else is running up?
Yeah, that's very interesting, and glad you mentioned that, because it's keen eye. You can see that it's just consolidating. Um, the reasons could be any, could be sector allocation. For me, it's more so we have to look to really get to the bottom of that answer. We have to look at the individual companies that are represented in XLY, the consumer discretionary. It could be, one of those things where some of those companies are maybe uh obviously underperforming, but also from an earnings standpoint, maybe they didn't do so well. So that could be kind of what's taken out that energy out of this sector. So to really get to the accurate bottom of this, you'd have to look deeper in and to see um what's in that sector, the individual companies. I don't have the list on top of my head, but uh consumer discretionary, meaning things people spend on, things that they don't necessarily need, but more so wants, right? So that's a wide moat, and we'd have to take a look and see why that's the case. But generally speaking, everything else has made a run up alongside the market, um, which is you mentioned it last time too, but even again, it's still holding up is utilities, which is quite surprising.
Yeah, doing really, really well. You definitely nailed that one. All right, sounds good. Let's go ahead and move on to the asset classes, excuse me, and see what's going on with oil and gold. Now, oil, we had this very nice run up here, kind of starting at the end of last year, like about the middle of December, making a very nice slow, climb upwards, nothing too crazy, nothing parabolic like some other asset class that we'll talk about here in a minute. But then we kind of got here towards this, it's about $87 a barrel, and we started kind of coming back down. And we actually breached down below my trend line, which of course we all know is absolute gospel here. But of course, I'm joking. But we are, kind of consolidating here on oil, really just making some sideways movement for the most part. So really not a whole lot of activity this week, but something that did have a lot of activity this week is gold, making an absolute another massive run up here, this week and, kind of ending last week. So a very, bullish market here for gold. Riz, we just continue to see gold keep going up and up and make new all-time highs. I know you've said that this is, kind of a little bit ominous and kind of giving us a signal that there is something going on in the market. Is this something we need to be concerned about?
No, not concerned, but definitely surprised with. Wow, right? Another all-time high is $2,414 an ounce. Damn, like that is extraordinary. And a lot of people are kind of in the commodities side of things, kind of perplexed a bit, because you don't see these kinds of moves that often, right? And the fact that not only did it go parabolic, had a little bit of a pullback, and then goes pretty much parabolic again for new highs, not that common, right? So. Uh, yeah, not much to be said beyond what we've already said. That it's something is going on. Of course, we'll never know, because there's so many factors at play. It could be other companies, sorry, other countries, increasing their exposure to gold. It could be many factors. It could be commodities trading firms hedging, taking risk off. It could be all sorts of stuff. So what we do know as a result of all that combined is that the price is up here after going parabolic and continuing to hit another all-time highs.
Yeah, it's definitely, I have not seen gold move like this, in my time that we've been running these webinars, and we've been doing them for a hot minute, as the kids would say these days. And you just kind of give you some context. Let's just pull it back out here to give you an idea. The last time we had a big move like this was back in 2020, but I would say honestly that this move has been even more surprising and more, volatile. But if you look here after this move in 2020, we have been pretty much range bound with gold. Between this area of $2,050 an ounce, and I'd say right around here at about 1690. We can just call it like around there. And so, yeah, it has been a very, slow mover, has been gold until just recently. So, really surprising in what's been going on with that. All right, let's keep moving here. Let's take a look at the bond yields and the US dollar. So bonds have been slipping a little bit, or I should say the yields, I should say, have been slipping just a little bit here since about the beginning of the month as the market started to rally. And so we are seeing a bit of, downward momentum here in bond yields. And honestly, the same could be said for the dollar. We had a very strong April and honestly March as well, from about the middle of March till, let's see, about middle of April. So that month-long period, the dollar was looking incredibly strong. We did some consolidation. We seem to be pulling back here a little bit, but honestly, not too much as far as the strength of the dollar is concerned. So, things are still looking pretty good for the dollar. Riz, do you have any comments here on the bond yields?
No, just a little bit of a healthy little pullback. It's still on an uptrend. As you can see, again, they will be impacted based on statements by Powell and the Fed. Remember, the more likely the odds of a drop or rate cuts come in, you'll see bond yields slip as well, right? And that will also impact the dollar similarly, where you will see the dollar slip a little bit as well. And you can see that that happened the past couple of weeks for both bond yields and the US dollar.
Yeah, of course, that was good. The Fed Chair Powell had a couple of talks this week, and overall, Riz, what would you say was the sentiment from Powell's speech? Is he looking more hawkish or dovish? Where are they at on this?
Yeah, so nothing hawkish or dovish per se, just because this was not one of those like a full-on Fed chair statement with notes and all that jazz. But ultimately, yeah, he's just been reiterating what he's been saying for the past, I would say, almost a year now, where they're wanting to get inflation down. It's remaining a little bit stickier than expected. They still have that 2.5% target. Uh, and yeah, they're not expecting a recession. They are expecting rate cuts, but maybe uh, not as much as initially expected, and that they might continue to keep rates higher if need be. It's looking a little bit more inconclusive as we are heading into the second half of the year.
All right, well, let's go ahead and take a look here at the important dates in the market this week. And looks like it's a little bit light as far as that's concerned. It looks like we only have the FOMC minutes and then durable goods orders month on month, going to be reported, excuse me, on Friday. Riz, are you expecting much out of these FOMC minutes, or do you think it's going to be more business as usual?
No, nothing unexpected. I think it's going to be the same old, same old.
Gotcha. Yeah, I was kind of thinking the same thing because what's really happening this week is earnings. And this is, of course, my favorite part of the webinar where we get to take a look at what is going to be happening this week in terms of earnings and who's reporting and who isn't. So let's take a look here. PANW, we've played this one before, Palo Alto Networks. Definitely one of the bigger names there. And of course, thank you to Zoom, which we are running this webinar on. Hope your earnings are great, but if not, well, we'll still be here using your platform moving on in the future. But we got bigger names on Tuesday. Let's say, Lowe's, obviously one of the bigger home improvement stores out there. AutoZone, always a popular one if you like buying cars. Really nothing going on after the close, if you ask me. Yeah, nothing really there. But then the big one on Wednesday is going to be Target. We definitely have, that's probably the big retailer we're going to have here. TJX, if you like, bargain stuff, that's definitely a good option. But then the big dog after the close, NVIDIA. That is the name that everybody is going to be watching and will more than likely affect the market on Thursday at the open the most, if you ask me. So that's going to be the big one here. Looking on Thursday, nothing too exciting, to be honest with you. I'm not too jazzed about any of these. And then Friday, well, everybody's taking Friday off, obviously, so we're not going to be reporting there. Riz, was there anything on here that I missed that you're going to be keeping an eye on?
No, so essentially the theme is retail. We got a bunch of retail stocks, companies reporting, whether it's like, Target, TJX, you got Macy's, you got Lowe's, home improvement stuff. So yeah, a lot of retail, of course. And then, like you said, NVIDIA, all eyes NVIDIA Wednesday after close. That's gonna move the semiconductor sector one way or the other, and as a result, it might maybe, depending on how big the move is, have an impact on the broader market as well into Thursday.
And how could I forget Polestar? I mean, everybody wants to be a Polestar.
Dude, it was last I cannot believe this. It was the last time that we were on the last, a quarter ago.
Uh-huh.
We were on and we're like, you mentioned Polestar last time too, and I was
I
like,
just can't. I
that
can't let it go.
yeah, I was like, dude, I know what it is, but it's actually um uh what's it called? It's been siphoned off from Volvo. Polestar is one of their brands.
Gotcha.
Yeah, I forgot. I can't think of the word. What's that word where you just
What, an automaker
yeah,
or
where you
spin-off?
siphon it off. What's it called?
Spin-off.
Spin off. There you go.
Yeah.
Perfect. Yeah, so it's a spin off. They spin off the Polestar brand. So yeah, it's an automaker in a way. Not what we may
Well,
think.
hopefully they don't spin off the pole. That could end up poorly for them. That's all I'm going to say. All right, joking aside, I'm sorry I couldn't miss that opportunity. What questions do we have from our elite members here who are here live? Would love to hear from all of you about what's been going on. But while you're going ahead and typing your questions, excuse me, in, I want to take a quick look here at everybody's favorite chip maker, AMD. We'll take a look here, and I wanted to get Riz's opinion on this because obviously, the President of the United States, Joe Biden, made an announcement this week that he was going to be like increasing tariffs on, Chinese products, and we kind of saw a run up in semiconductors with that announcement. Riz, do you think that that is enough to kind of continue the semiconductor space to continue up on the upside? And then, of course, obviously, we've got Nvidia earnings on Thursday, which will be pushing it a lot. But what are your thoughts on that?
Yeah, tough to say. I feel like you said, the Nvidia earnings will make a difference here. So we know earnings can be a bit of a toss up, and yeah, and the fact that it's up against that 50-day moving average as well before.
Mhm.
So it's going to be interesting to see Nvidia, like you have up right now near all-time high. Still, that's almost like a triple. It is a triple top, right?
Gotcha.
And classical definition of a triple top. Again, technicals go out the window for the most part. Not completely, but for the most part, to go out the window during earnings catalyst.
All right, cool. Abhishek has a question here. He says, "How does ACN look for a starter position holding the 200 weekly moving average so far?" Well, let's go ahead and take a look at ACN. Accenture. Not too familiar with this. I guess he's got a different moving average up than me, but that's totally fine. Let me go ahead and look here. Obviously, we had a nice, sell off here post earnings last quarter. So earnings were good. I guess revenue wasn't so hot, but yeah, maybe the guidance wasn't so good because a move like this would kind of reek of guidance, if you ask me. And kind of came down here right around 300, and we just kind of be looking like we're sitting there. Riz, you getting in on this knife catch?
Yeah, I've been watching it. Didn't get in luckily because I noticed some consolidation and weakness, and you can see that confirmed on Friday. So back in our, near the 303, 300 area after touching a little bit above 310. As far as the moving average, yeah, he has the weekly
Weekly?
on.
Oh, we can change it to weekly.
Yeah,
Let's see what it looks like. Oof.
yeah.
Okay, yeah, I see that. That's definitely a
So
nice bounce there.
yeah, yeah, definitely on a weekly, looking like nice confirmation along with that 300 support as well. So yeah, definitely I think it's a good setup. It's actually a good setup. Accenture is a pretty solid, good company. Um, but yeah, definitely something I'm keeping an eye on. The fact that market's at all-time highs, and this has obviously been a weaker stock from a relative strength standpoint. So that's one of the things that give me a little bit of pause. But from an entry standpoint, just purely apart from the market, I think it's definitely looking good for a starter at this support zone. And then if you see a break below the 300, maybe you can decide to take it off. Uh, but other than that, yeah, it's definitely looking like a good setup.
Absolutely. No, definitely good there. As far as the technical is concerned, I definitely do like it on the technicals, but yeah, on the daily, ooh, the beating. But we do seem to be holding around this 300, and yeah, I 300, excuse me, support level, and yeah, definitely not too bad. Okay, I know everybody wants to talk about it because everybody's been saying how it's the greatest stock ever. Let's take a look at everybody's favorite meme stock and GameStop. Obviously we had some tweets going on, some revitalized excitement about this piece of garbage. But Riz, obviously you had a little bit of a good day with this. So why don't you tell the folks here, if you haven't seen the video yet on, I think it's on your Instagram if I'm not mistaken, about what you were doing with GameStop.
Yeah, so I had the video as well for us elite members exclusive only.
Oh,
How I
gotcha.
played this, how I traded it. And it worked out really well, about 50K in total gains on this opportunity. So I'm pleased with how it worked out. Again, it was something that you need to have the stomach for, you need to have the conviction in. Of course, the way I traded it was via short calls. So for those that don't know what that is, it's essentially me saying, the price will and should stay below a certain price point, and for making that bet, I essentially get paid for that if it stays below. And boy, did it stay below, the level. So, very interesting type of trade. Those types of trades have an edge, a statistical edge, for many reasons. But not for the scope of this webinar. Ultimately, it was a profitable trade for the vast majority of us, and it wasn't the classical, okay, let's buy, like every other monkey out there. So we've definitely played this the smart way. It worked out. Like I said, you had to have the risk tolerance, you had to have the account size, and you had to have the conviction in it. But if you did, you were rewarded very handsomely. Um, and yeah, so for me, like I said, I eat my own cooking. So I took a decent sized position, and real time entry and exits for people to see how I'm playing this. And yeah, very pleased with it. Right now, we have seen that when these things happen, where you see this massive pump and then big pullback, it's not usually one and done. Usually you have a little bit of a resurgence again. Maybe you want to call it a dead cat bounce or dip buying again. So we'll see, like the fact that Friday, you can see that candle did hit the low of 20 on that day and then kind of pick back up for 22-21 close. Maybe we see a little bit of a pick me up this coming week as well. And if we do, then I'll be there to take advantage of that as well, using my strategies. So, uh, when these things happen, they don't happen often, but when they do, not just in GameStop and anything else, these kind of events do happen in the market, and they are opportunities. If you know how to take advantage of them, they're opportunities, right? And that's how I look at it. I can't control when they will happen. I can't control if it will happen, but when it does, I'm there. I need to be ready. I need to be able and willing to be able to take those opportunities in a very smart and calculating way, of course. And so far, it's been very lucrative. So yeah, I can't complain. 50 grand, easy. I wouldn't say easy, but in a very calculated manner. 50 grand, with not too much exposure. I didn't go crazy on it. I was very conservative with this. I'll take it. And if that means it's coming out of the pockets of morons, then doubly so.
We always like taking money from morons. I'm totally for that, by the way. I guess just one follow-up question. Now, of course, I don't want you to give away your strategy so well, but because people should be taking the options masterclass, a great choice. If you're looking how to want to learn to trade options more successfully, a great option for you. Definitely check out down in the description for that video to see that bit of a preview for that class so you can get your hands on it. But why would you what is the benefit of doing a short call as opposed to just buying a put? I think that would be an interesting bit of discussion. So why did you choose that strategy over the other?
Yeah, so you could, people will say I'll buy calls or puts, and sure, but the implied volatility, meaning like the, think of it like the premium is an added premium. It's like a sticker, it's a markup on MSRP. So it's like this added premium was very, very high, very, very expensive. So you could technically even be right on the direction, but if it wasn't large enough of a move, you would end up losing money still. So that's one of the reasons why I don't, and I didn't buy options in this case. So being an option seller, meaning shorting, aka writing the options contract, is actually more beneficial, especially in these cases. And that's how it worked out. We took advantage of that implied volatility and the decay, and of course the stock also went down, which benefited us even more. So that's the positioning around it. It's definitely very nuanced. You got to know what kind of strikes to take. You have to know what your exposure is. You have to know a few key, I would say, metrics around options. It's not just like, oh, okay, let me just short an option, or no, you have to have a method, like you have to have a method behind it, and there's a strategy behind it. And of course, as you mentioned, I teach that in the master class. So again, the stocks and options master class combined. It's one masterclass, and yeah, I cover everything stocks and options related. But yeah, this is a strategy that I've honed and perfected over many years, and it's something that many of us use in elite to this day.
Well, I don't know if I could have said it better myself, Riz. I think that's a great way to go ahead and call it a night on. And yeah, it's going to be a very interesting week in the market. We've got a lot of retail earnings coming up. And yeah, we're definitely going to be there. And if you're not part of Elite, you need to make sure you get in. Now, if I'm not mistaken, Riz, let's talk about that for just a second. Now, I do believe that we did have an opening in Elite, but is that closed or can people still get in on that?
Yeah, no, like the official opening to new members is closed. We ran that for about a week, and a bit, and yeah, we had a great reception. A lot of new members, a lot of people took advantage of that. So now we're closed most likely throughout for the most of the summer, and then I'll see if depending on how many spots we have left and how uh things go if we decide to open up to new members in the fall.
And if people want to get on the wait list for that, link is down in the description, right?
Yep, perfect. Yep.
Perfect. All right. Well, if you want to get in on this, if you want to be part of Elite and, understand Riz and how he's trading and just, casually making 50K here and there on meme stocks like GameStop, make sure you get down and hit that link in the description. And as always, we'll see you in the market on Monday.